Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, November 13th, 2009. Well, folks, the markets are floating up on extremely, and I want to stress this, extremely light volume today. The volume probably will be the lightest of the week. Not surprising to see the markets generally floating higher. Now, what is the key catalyst today? It's the same catalyst that has been in the markets now for probably a year plus, which is exactly what it is: the dollar, the US dollar. The market continues to trade inverse to the US dollar. I'm going to put up a chart in a second here that will show you the opposite of the dollar. It's basically the UDN is the symbol. It's the dollar ETF here in the opposite direction. So when the dollar falls, it goes up, and that's exactly what the market does. And if you look at these charts side by side, there is the exact chart next to each other of the spiders, and the spiders again mirroring the S&P 500. So take a look at this. First, let's take a brief look at what the market has done today. Initially, we sold off, and then we had a surge, pause, surge, pause. Check out the UDN chart, which is the opposite of the dollar. So really, when the dollar's falling, it's going, and the chart should match up almost identically. Look at this. Initial drop, surge, pause, surge, pause. See that? How crazy is that, folks? And again, I like this new chart of the UDN because it gives us this should match up to the way we've been telling you guys, which is basically that the dollar the market does the opposite of the dollar. It should match up basically identically because the UDN is the opposite of the dollar, and so is the market. The market goes the opposite of the dollar. So again, check that out. A little drop, surge, pause, surge, pause. What does the spiders have? What have the spiders done? Look at that. A little drop, surge, pause, surge, pause. It's beautiful. I mean, it almost makes you laugh a little bit based on the fact how close the market is tied. I mean, you think you're trading stocks based on fundamentals. You think you're trading stocks based on the the Michigan sentiment that we got out today at 9:55. It really doesn't have anything to do with that, folks. I don't mean to burst anyone's bubble out there, but frankly, it's all about the dollar. It continues to be. It has been. If you look at your dollar chart going back to March, the dollar topped exactly the day that the markets bottomed in early March 2009. That's how crazy this market has been. Now, just talking some technicals. Obviously, you want to know about the technicals of the market. Where do you think the market's going to go? Well, the dollar, again, as it falls today, is giving the markets a little bit of a light volume push. As long as you have that type of atmosphere in the market where there's no volume behind it, you're going to have that general. I mean, look at the volume right here, folks. It's basically non-existent. Today should be the lightest trading day of the year. And funny thing is, the one candle right here, which look, by the way, it happens to be a red candle, biggest sell candle of the day, biggest candle of the day, biggest candle of the week, in fact. And sure enough, look at that. It happens to coincide with the Michigan sentiment being released today at 9:55 a.m. Eastern Time, and it was an ugly number, very ugly, but it doesn't matter. Remember, you could come out and say we lost a zillion jobs, and as long as the dollar drops, this market will get propped up. And now the big question remains, do we see the actual market reacting in a normal manner? For instance, do you guys think that there may be some event or powerful body, whether it's the Fed or not, that is purposely forcing the dollar down? I personally do. And I'll come out and say that, folks. It's almost too obvious on light volume days how you have this little bit of weakness in the dollar, and it just pushes the market up. And then you have a little more weakness, pushes the market up like that. Weakness in the dollar, pushing the market up. And just little by little. I mean, it's very, very stated, very controlled, but you're seeing it in the markets. And again, you can see here perfectly. I mean, there's a reason why you have a little bit of a pause, pull back, then a surge, and then pause. Now they surge it again, pause. And you can see the UDN going the opposite of the dollar. So the dollar's really dropping. The dollar's really going like this, and then you drop, pause, drop, and down, and so forth. That's the opposite chart, obviously, of the UDN. The UUP would be the opposite chart. But in any case, that is exactly, and I mean exactly, what the market's done. Here's the UUP, which is the dollar chart, and look at that. Again, a little surge, drop, pause, drop, pause. So that's exactly the market in the opposite way. And again, it's very much controlled, which has to make you think that there's probably some other being out there or body out there that is purposely keeping the wrap underneath the dollar, kind of making sure that it continues to deteriorate. Now, it's kind of sad in that because the issues that you're creating are going to be much, much longer lived based on what you're doing. You're basically eroding everyone's buying power. My dollar that I had yesterday is not worth as much as my dollar today. Today, technically, I can't buy as much as I could have yesterday with my dollar, and that's really happened since March. Now, granted, it's propped propped up the markets. They think it's helping the economy. Is it really helping the economy? I don't know. That's the bigger question. I happen to believe it's not. Ultimately, it's going to cause problems to be much worse. But again, you'd think that they would be smarter than me out there. I don't necessarily agree with that, considering Greenspan, when he lowered rates to, as much as he did in 2000 to save us from the tech bubble burst, really created the housing and credit crisis. I mean, that's really where it came from, folks. The Federal Reserve created that by propping up the markets early on. So you have to wonder, where are they going with this market now? How are they going to prop it up this time? And what is that unfortunately going to create for all of us have to deal with down the line? All of you guys out there that know someone that lost a job, well, guess what? If they doing what I think they're doing here, it's only going to create another bubble later on that we have to deal with in 3, 5, 7 years. And oh, that's great. Now we have to all go through something else. So again, it is what it is. As our job is to trade it. We trade it. We trade it intraday. Those of you that are with us in the chat room, those of you that are with us in the research center, you guys know that. That's great. Also, I want to reiterate, we have a webinar tomorrow. There's a couple spots left. Go join up now. You want to be in on this. We're going to cover all our methodology points in regards to calculating pivots, calculating cycles, understanding counts in a chart. Basically, if you know anything about technicals, even the basics, you're going to want to be in on this. If you want to know about technicals, you're going to want to be in on this. It is extremely important. The stuff that we divulge, again, will open your eyes to a new world of trading and profits, all right? Now, again, obviously, if you're not even involved in the Research Center, you need to join the Research Center. You need to join the chat room. It's just that obvious of a move. The kind of analysis we do every night, setting you up for the next day, for the next week, for the next month. We focus on intraday. We focus on longer-term investors. We focus on swing traders. It's all there for you guys, and you need to be in on it, all right? So that's what we have going on. Spiders, let's touch quickly on what the spiders are showing here on an intraday basis. This right now is bullish consolidation, but I frankly couldn't care less. Why? Well, because it's all about the dollar. So if the dollar decides to drop a little more, then the bullish consolidation is going to play out to the upside, and you're going to go up here to the 110.34 level. If the dollar starts to rally this afternoon and maybe push up, you're going to come right back in a little bit as well. So it really is all about the dollar. These levels are the levels that obviously we've utilized very profitably as shorting opportunities and going long opportunities, scalping opportunities. They continue to be that way. You want to understand this fully, but overall what you're seeing here, folks, is a dollar-driven market in an opposite direction. That's exactly what it is. All right, folks, that's all for today. Join the webinar for tomorrow. You want to be in on that. Also join the Research Center chat room. Trust me, it is the new life to your trading perspective. Take care. Have a wonderful day.